any company, whether you're a manufacturing company or a distributor or a consumer products company, a very big thing that people are talking about is we got to go direct to consumer. We got to understand our end customers better. And what that means is that the amount of data that these companies will have to collect has just exploded. And people are trying to shorten the distance between the manufacturing and the end consumer. And so that trend really drives the whole movement toward digitization of the business. The other big trend is that, when you talk to senior management of various companies, they all say, we got to use data to drive decision making. And that's, again, where the need to digitize your operations, both customer end as well as internally, becomes very, very important. So I think, if you ask for advice, I don't have we're sort of natives in the internet and digitization industry. But today, if you're a manufacturer, if you own brands, or if you're a distributor, I think getting closer to your customer and understanding the need, it's no longer a luxury. It's a necessity to digitize your operation. That's the big trend that I'm seeing today.
Thank you, Joe. Let me turn to David. Joe talked about the big trends in that you have to go direct to the customer. The expectations are changing. They're going digital. The importance of data. In your view, what have the traditional banks, commercial banks like HSBC, what can they do, and what can they do more in meeting this change in customers' expectations, the use of data, and the big trends that Joe was talking about?
Thanks, Eddie. First of all, I fully agree with Joe and what he said, but I do want to qualify the labeling of a traditional bank, and it's a strong word. Finance, as you know, is an age-old industry, probably ever since bartering extended beyond one day when someone's owing the other person something. So within that distant journey, HSBC owns about 156 years of that. We were a startup. We're a startup that picked the two right cities, Shanghai and Hong Kong. Home market, the spiritual home is in Hong Kong. And we are digital in that sense. We spend about over $5.5 billion on digital every year. But what Joe mentioned is right. The key to any business, in our case finance, has to serve societal needs. Be it retail customer, be it trade, be it corporates, institutions, and that's the premise. And the other theme is also accurate in that we are going into a trajectory of a very different technical trajectory compared to years before. And it's really up to all industries to use technology to discover data about clients and market opportunities to find ways to serve them.
Mm. Thank you, David. Well, let me now turn to Neil. Neil, you've been investing in a big portfolio of companies. And many people are saying that technology will be a major driving force for global growth in the coming few years. And this digitalization of most companies will continue. And from your perspective as a VC investor, can you share with us what kind of technology trends you think will shape the investment landscape of fintech in the next 5 to 10 years? And are there particular sectors that you will caution against?
Thanks, Eddie. And it's great to be back at the Hong Kong FinTech Week. I think there's a few trends as we are, looking at those emerging, promising companies. First of all, I think the space is increasingly global. When I say global, it means that if a company is successful for its product in a certain city or certain region, it could actually expand the product, quite, successfully in other, cities and regions. That's the case for the traditional financial service industry. In fact, when you look at the investment banking world, typically, those, leading ones have a global business. We're seeing a similar trend here. Today, many of those fintech companies not only actually being successful in one country, but increasingly they could be global leaders. We're seeing that trend very clear in the last few years, and I think that probably will continue. Second, I think global means cross-border opportunities are increasing. For example, we have a fabulous portfolio company called Air Wallets, which actually is based in Hong Kong. So this company tried to address the cross-border payment opportunities. And this is obviously increasingly a demand by global consumers. Today, you'll not be surprised a Japanese consumer want to buy something from a Chinese app, or a Chinese consumers buy something from global e-commerce platforms like Farfetch or Essence or Amazon. So that type of demand has drive the cross-border opportunity, and I think a company like Air Wallets has really provided a payment solution and gateway, replacing some of those have been provided by the traditional banks, which could be less efficient. So I think the second trend I'm actually seeing is the companies in this space are using more and more sophisticated technologies, blockchain being one of them, and AI also is a major tools those companies are using. When we actually recently visited a dozen of companies in Asia, we find that most of the company has adopted some type of AI in their applications, including many consumer-facing ones, whether it's in the credit tech or whether it's in the wealth tech or in the insurance tech. And you need to use those technologies to enhance the user experience, especially when you're actually facing the C customers, as Joe and David just being mentioned. So I think companies in the space have to be AI in nature. You need to have those important technology deep in your DNA, so that you can become a very competitive player.
Thank you, Neil. As you talk about the introduction of different technologies like blockchain or AI into finance, let me turn to the second topic, which is about the future of finance. In the recent years, we've seen big technology companies like Alibaba and the others coming into the financial services sector. In fact, if you look at the virtual banks that Hong Kong has, a number of them actually have big tech as the joint venture partners. At the same time, we're also seeing traditional banks, the FinPart, going more and more into technology, employing the latest technology, blockchain or AI, into their operations. So it seems that the tech FinPart and the FinTech path, they're gradually converging with each other. And I'm sure that there's got to be something that each can learn from the other. So I'm interested in how that cross-intersection will lead us to. So let me first ask David, with the emergence of virtual banks in Hong Kong, has that impacted on how traditional banks are conducting their business? Or do you notice any particular change in the customer behavior, for example, in terms of their stickiness? Will they turn to the new banks more easily?
Yeah. I mean, just now we spoke about the finance industry, and in general, it just needs to serve people in the financial elements. Eddie, you will know well that finance has run through centuries of ups and downs, and there are risks and mistakes that we've discovered, that we've built regulation to ensure it's a sound system. It could be capital adequacy. It could be liquidity to prevent runs on bank. It could be financial compliance to ensure financial crime doesn't take place, to fuel drug industries and sort of child slavery and that sort of stuff. We have to adhere to that. And financial services under regulations need to ensure that financial integrity in Hong Kong and anywhere we operate. You mentioned about the creativity between FinTech and TechFin converging. They will converge so much as it's within the realm of that prudence environment. But we also need different creativities. First of all, Alibaba and many of Neil's portfolios, including Airwallex, whom I'm seeing Jack soon, great guy and a great company. These guys are just driving phenomenal creativity that serves the client, right? I mean, I couldn't live without, the Alipay going into a restaurant in China, sort of 5-10 years ago. So again, there's a convergence into what's the best practice of finance, but we also need to have creativity sometimes out in a traffic jam. And I was just looking up on Gloucester Road and I saw the Airwallex advert that says, if you're in payment traffic, bypass banks. That's a great soundbite, Neil. Now, a couple of things to qualify there. I think if there are payment traffics, the banks need to do better. And that's why I mentioned we need to constantly invest in the technology, because the regulatory landscape and how we're serving society is also changing. Today, we have technology to open accounts in 3 seconds, to make payments in less than 1 second. But as people go global, we cross border in different jurisdictions. We need to respect the regulations and environment of different markets. We need to adhere to compliance. We need to make sure that there's checks and balance. Now, there's a lot more work that financial institutions need to do to improve that experience. They're also outside healthy competition like Airwallex that provides that greater experience, provided that there's the proper cross-border compliance wrapping.
Right. I think the healthy competition that you talk about is extremely important in driving creativity, driving innovation that eventually will benefit the customer experience. And let me now turn to Neil. You've been investing in a lot of companies, and I'm sure that some of them are successful, like Wallace, but many of them will actually fail in the end. So, with your experience in the area of finance, what do you think are the make or break conditions or factors that will define whether a financial institution or a startup in the finance space will stay competitive or not?
Yeah, I think that's a great question. I think, first of all, risk control is very important in this segment. When we talk about fintech, fin comes first. So first of all, you are a financial service company or you are financial service related. I think, it's critical to developing that skill internally. And frankly, a fintech company is very different from another technology startup in other segment, whether it's retail or whether it's manufacturing. This is something that should be deeply rooted in the culture of the company. Obviously, including the mentality of the CEO should be all over this. Second, I would say innovation is very important in this segment. I would say it's continued innovation, because this segment has been evolved so quickly. Back 10 years ago, when you look at the payment space in China, I think Alipay and Tencent Pay are largely, for online transactions, the e-commerce transaction. Today, they're everywhere. If you talk about, going to any local restaurants or shops, that no one's used cash anymore. People using, whether it's UnionPay, Alipay, or Tencent Pay. And the technology also has been evolving rapidly. So a company needs to be successful in the space, had to, really adapt to those changes and innovate themselves. Lastly, I would say in this space, to recruit and retain talent is of great challenge, because you are competing not only with a company like HSBC, the big, financial service, giants, but also you're competing with Google, Amazon, you're competing with Huawei, Alibaba, and Tencent. And how to retain those talents and make sure that, you can get the best of them and to, have them to working with, you for the longer term. I think it's a very, very I think, challenging, job. And I think the good ones tend to have the very, very best, our technology talent, oftentimes combined ones from the technology world as well as from the financial service world.
Thank you, Neil. I'm glad that you mentioned about the importance of risk compliance and monitoring, and that justifies our existence. So thanks very much for mentioning the importance of that. And let me turn to Joe. Alibaba, as a very important tech firm, has got into financial services in China some years ago. When the company first got into it, is there anything that at that time you have been learning from the experience of traditional banks, whether they're good or bad? And now when banks are actually embracing fintech and getting innovation and technology into their operation, have you got any advice for banks from the big tech's experience or perspective, something that they can actually learn the other way from the technology companies?
Yeah. So I was personally involved in our business unit that was lending to SMEs when we first started it. This was a division that grew out of Alipay, and it became one of the very big businesses for Ant Financial. And I still remember that we look at a lot of the traditional ways of SME lending, where you can't get very good information. So you have to find different data points for example, by visiting their stores and checking inventory levels from week to week and things like that. So there have been a lot of traditional ways of collecting data and analyzing data that we learned other than just looking at a P&L and balance sheet. And what we learned from the banks is that whether you're a fintech or a tech fin, at the end of the day, we're in the risk management business. The risk management cuts across all different lines of our business in Ant Financial. As you know, we started with a payment company, Alipay, and we had to manage fraud risk and KYC risk, in terms of payments. When we got into credit underwriting, we have to manage credit risk. And how do you analyze data and create the right algorithms to underwrite risk? When we created the money management fund product called Yuebao, we had to manage liquidity risk. So there's risks all over the place that you have to manage. So we realized that at the end of the day, David talked about a prudential management framework. You're managing risk. And that's why regulation is very, very important. Now, the area where technology companies sort of had a little bit of an advantage, I think, are in two areas. One is product innovation. I think technology companies are particularly good at engaging with the users with their products. Starting with payments. Once you're on the payment platform, technology companies are very good at getting users to do more transactions and engage them directly. And the other thing is more sort of hard tech innovation, the use of AI. Neil talked about the use of AI. Areas where AI are very good are, number one, AI can recognize patterns. So in our payments business, we are able to use pattern recognition to recognize or predetermine some transactions that could possibly be fraudulent and prevent against that. And the other thing that AI does is predictive technology. So this is where we employ in terms of, for example, our credit underwriting business, whether it's consumer loans or SME loans. We can predict when we see certain types of behavior through AI that the risk is not worth underwriting. So there's a lot of good things that technology companies bring to the table when it comes to product innovation and also the hard tech stuff that I think banks can learn from. Now, again, I just want to reiterate, every technology company that purports to want to do tech fin or get into financial services, you're in the risk management business. And risk management is very, very different from chat or short form video or, all these things. And it's very, very hard to do. So you need to bring a very, very different mindset to running that kind of business.
Yeah, I think one theme that gets across all our three speakers is that even when tech companies get into finance, it's a risk management business, and observing the right regulations, including those transactions that are cross-boundary or cross-border, is actually very important. Let me float a very general questions to all three of you. How do you think the future of finance will be like in 5 to 10 years? What are the challenges? What's the shape of it? If you look forward to 10 years later, how should we expect our financial services to be delivered? Through the current form, or are there new forms, or what will be the trends? Maybe let's start with Joe. What's your thought about how financial services will shape like in 10 years' time?
Yeah, I mean, it's already happening. You already see the future, which is the way financial services companies engage with their customers is using this thing. If you could see this, this phone, it's a mobile phone, right? It's a device. And if you think about traditional banks with a branch network, it's actually quite anachronistic in the sense that banks provide products that are virtual. It's really a service. You're not selling physical products. Yet you have physical branches around town that's very, very costly. And you try to engage with your customers through physical means. I still get my paper statements from my banks. And I think in the future, the way financial services companies engage with their customers will be virtual, will be digital, will be on a mobile device. And that's where things are going. And I just think that currently, if you have a bank with a lot of sort of physical assets, you have to think about how to transform those into, first, a digital way of engaging with your customers, and maybe employing your physical assets in some other way, maybe partner with e-commerce companies, for more of a retail operation where you can deliver products from the branch network by placing inventory in those branches. So I think if you're a traditional bank, you have to think about a new way to engage with your customers, and that's where the future is going.
All right, David, what do you think?
Yeah, I agree. I think you're asking for a projection, and I think the world will turn into quite a different place compared to now, and it's more so than how today is different from 10, 15 years ago. And I think the two biggest global challenge of social disparity, climatic challenges will really change the way financial service, or for that matter, all industries and how they behave. There needs to be a stronger sense of mutuality, where Joe mentioned we need to realize that you're part of a body. You can't do everything, even at the size of a huge, giant financial service company. You've got to find great partners. And as I mentioned, many of Ali's companies or many of Neil's companies, they are both clients and partners. And actually, we are clients of theirs, of Ali Cloud. So we've got to trend towards that. I think we've got to trend towards looking beyond shareholder return metrics, because it's a matter of mutuality. It's driving a social journey. Take our, COP26 is happening right now. Take that for a moment. We look at green finance and we look at that, and a lot of times we're in a bank and we talk about what is the commercial journey, what's the commercial landscape. But we got to look at both sides of the coin. What's the cost of not doing it? What is that damage that we will potentially save? We do that in the credit business, right? We're a risk business. We choose to lend and we choose not to lend. And we got to look at both the cost and benefit of both sides of that. Joe mentioned about, to that end, in serving those, whether it's physical or virtual, or digital, or through AI, we're driving towards that purpose. I do think we still need to see each other physically, and that may be manifested in a branch or in Starbucks. But somehow there's a relational touch towards, that's our need. But there are also a lot we could do to make life easier by driving, sort of digital and using technology to make lives easier.
Right. And I think the full house that we're seeing here demonstrates that we do need some human interaction sometimes. Neil, what's your thought? You're seeing lots of different new finance ideas. What's your thought about the future?
Yeah, I would say 2 points. One, I think the converge of those fintech startups are enabling companies and those so-called traditional financial service will be accelerated. When you look at retail space, for example, in China or globally, after some 20 years, today we're now no longer saying, oh, you are an online company or you are an offline company. I mean, every single retailer have omni-channels, both online and offline. So I think, at the end of the day, that a fintech company or technology should be part of the
recording in progress
that any financial service company should have. My second point is I think all
recording
those great technology is all about provides better user experience and also at a lower cost to consumers. So in a way, I think we are moving towards 普惠金融, when consumers anywhere in the world can actually enjoy this product at a low cost or much lower cost. And some of those products which were not available to those consumers today could be provided. This is obviously true to InsurTech, also to online wealth management, and so on.
Yeah, I think the social elements of financial services is important and is also touched upon by both Neil and David. And financial inclusion and other social purposes like climate risk is something that I think financial institutions will look into more in the future years. Finally, let me now turn to talent, something that I thought Neil mentioned earlier. People is extremely important in running a digital and innovative business. And how to lead these people, the type of leadership that we need is extremely important as well. So let me first ask Neil. You've got experience in investing in your portfolio companies. You've got experience of founding companies and creating brands. And you need to recruit and retain smart people around you, both for the portfolio companies and your own brands. But smart people have smart ideas, and they might be very opinionated in certain things. How do you bring them on board to be aligned with the company's core values so that they can really create something that's in line with what the company needs?
I think that's a very, very great question. I think, first of all, indeed, you need to have some common core value and missions. In Chinese, we call it 使命愿景价值观, I think, to rally people together. Second, I think, you need to really have this 责权利, dedicate, the power to, the people responsible for it. And also, I think, to obviously, make sure they have long-term incentives. And on this point, I think it's very interesting. When you look at the traditional financial services, companies, typically, they are very profitable. And they typically pay, the top management in cash instead of paying long-term equity. Whereby, in the fintech space, those companies are small and they're typically paying people all equities. I think somewhere between the balance needs to be, I think, established. A long-term equity, either, even for big company, is probably necessary so that make sure that, I think all the teams can work in towards one goal, which is long-term value creation. Lastly, I would say it's very important to keep a flat structure internally. It's not easy for large company, I know, for example, for HSBC, but it's always probably, the best way to make sure that the decision-making could be made a lot more effectively, and also different opinions could flow over from, bottom up.
Well, you talk about a flat structure and a bottom-up kind of flow of ideas. Joe, you've been running a tech giant for years. Is that the case how the company is managed, in that you're really encouraging bottom-up ideas flow, in that most of the creations actually come from the people who are closer to the ground and not the management who are a bit off the ground. What was the advice that you will give in terms of leadership as a tech giant management?
Yeah, so if you want to lead in your industry, I think you have to pay attention to your people for obvious reasons. But to your question of whether it's bottom up or top down, I think it's both. I think you have to rely on the front line, especially the young people in your company that are dealing with customers day to day. From a bottom up standpoint, rely on them to come up with the most innovative ideas on product, on user engagement, on things like that. But when it comes to strategy and when it comes to disrupting an industry structure or reshaping, rearranging the deck chairs in terms of creating more opportunities within the industry, you have to bring in a little bit of a top-down perspective to things. In our company, the chief executive officer is also the chief strategy officer. You have to be able to identify industry trends and industry structures that are inefficient and try to change that. So that's, by and large, most of what we've seen is a top-down kind of process. But so it's really both ways. And you need to have young people to really understand what the customers want. But for broader industry structure issues, the senior management needs to be very, very focused on it.
And let me come to David. As the leader for a global bank, as you go through the digital journey, what's your advice on leadership when some of the areas that we talk about, innovation, creativity, you've got to have an environment that nurture a bottom-up culture, which is probably not a typical culture in a traditional bank, I guess.
Yeah. I mean, first of all, I'm glad you started recording Neil Shin. I'm going to play back that words of wisdom. But I was also intently listening to Joe's advice as a tech company to the financial services. Look at our journey, right? We're a global bank. We're driving global standards, and that needs to have a broad top-down reach. We went through a journey, remember, of our deferred prosecution agreement, driving new standards of compliance that we didn't quite have fully before. That requires a garnering of discipline, galvanizing the purpose. It's very easy for these very large institutions to then settle at one set of culture, and that may be a bit too top-down. As Joe mentioned, that we need to make room for creativity, especially a digitizing journey. And even within that, we have to pace that talent change. We sometimes look at attrition, for example, as a bad thing, as a high number, and we need to dial back down. But maybe in a creativity journey, you have a 2-3 year dash of a set of talents that's just driving change and disrupting. As they create ideas and we need to settle, then maybe they move on to other things and we have a different kind of class of people moving in. I think the difficulty for large global financial services is finding that balance, finding that nuances, but there's really no shortcut into really caring about your people and knowing what type of people they are and consciously putting them in an environment in a defined purpose.
Thank you, David. Time is quickly running out. I think we are coming to the end of our session, but we've been benefiting a lot from hearing the insights from three speakers who come from Fintech, TechFin, and also the investor in Fintech and TechFin. It's really great that we have the fortune to share your insights today together with us. I will invite you to join me in giving our speakers a very big round of applause. Thank you very much for joining this session, and this will be the end of the session. Thank you very much. Enjoy the day.
Thank you.
Thank you.
Thank you.
Thank you, Joe.
Thank you.
Thank you, Neil.
Thank you.
Thank you.
Well, thank you to our wonderful speakers. And indeed, the future is here. And by being today with us, you are already moving one step forward to create impact. We're going to have a little short break, networking break, so make sure that you connect. And we will be back here for more interesting sessions, content, and amazing leaders. See you soon. Ladies and gentlemen, our next session will resume in 3 minutes. are back and we continue with very interesting content. And our next session, it's our keynote fireside chat. And we are very, very pleased and so honored to have our next speakers with us. Starting with Mr. Christopher Hu, Secretary for Financial Services and the Treasury, Hong Kong Special Administrative Region, together with Lei Zhang, founder and CEO of Hill House Group. Please welcome them on stage.
Hi, Zhang. Thanks for being with us. And as the founder and CEO of Hill House, I think many people know you as a pioneer, investing in many of our Hong Kong early-stage, technology-driven companies. I'm just wondering if you can take this opportunity to share with us your investment philosophies, and also in particular, any interesting investment stories that you would like to share with us.
Yeah. Thank you, Secretary Hui, for the kind introduction. It's really an honor and pleasure for me to be here to share with the community about our investments and our views of the Hong Kong innovation community. Really, you touched on a very interesting topic about innovation in Hong Kong. And I think that what we are excited about is really the people in Hong Kong, the community that we see that continue to innovate, to create new business models, new ideas. I'll give some examples what we are excited about. And it's really across a broad range of industries. And, we are the first early institutional investor and the largest institutional investor in company Lala Move, which is essentially an internet platform company. We are the first and largest institutional investor in Little Freddy, which is actually organic baby food, homegrown Hong Kong company, and a number of SaaS technology company, the Airwallex, the Aftership, the number of SaaS companies as well, and even biotech and life science, now part of Illumina. What we are excited, what we see in common among those entrepreneurs, maybe I could share that. And I would say number one is really the fast learning, the open mind, the idea of constant learning and making the organization a learning organization. So you see that as clearly a trend among the top entrepreneurs. Because if you look back on the initial, original business plan compared to today, it's almost like complete different businesses. People change, people keep on adapting. So we are very excited to see the entrepreneurs who continue to adapt and with their fast learning capabilities. I would say secondly, it's about the view about how to make the pie bigger. And the idea of focusing not only on what money you could make, but look at the whole industry, look at the whole value chain, and how we could work together and get everybody to make a pie bigger. I think that mentality is actually very hard because a lot of people are very focused on their competitors. But the real great entrepreneurs, exceptional entrepreneurs, they actually focus on their end users, focus on their customers, instead of being really very much only looking at what a competitor doing. They truly study based on first principle on what entrepreneurs and what the end users and what internally their organization been doing. And finally, I would say that about this somehow there's this grit, the resilience that we see in those great entrepreneurs, that they continue to keep on thinking about how do I do this better in front of not only the good times, but also sometimes with challenges. So, like Mike Tyson said, everybody has a plan until being punched in the face. How do you plan yourself when you are being punched in the face? And how do you keep on adapting? How do you have that resilience? We are pretty excited with this community, especially when we have those entrepreneurs around. Maybe Secretary Hui, if I have this opportunity, I'm actually curious about this in Hong Kong and to nurture an ecosystem for growth and innovation in Hong Kong. It's very important to be on the same page as on the government policy. Could you maybe share with us on Hong Kong's plan to further developing innovation and in particularly on the fintech industry?
I think as you highlighted, what you just said about those entrepreneurs in terms of being adaptive, in terms of being resilient, and also being able to continuously learning is very much exactly what we're trying to do and also what we try to demonstrate as a government. Because after all, technology is moving fast. Like, for example, today we have a fireside chat without fire. So it is something that we keep on being adaptive in terms of what more we can do to facilitate the growth of this ecosystem further. So on that front, we are pursuing right now three-pronged approach, trying to grow this ecosystem. First of all is the open data policy. As you may know, the HKMA just announced under the policy address, the chief executive highlighted the plan, the launch of the commercial data interchange. This whole idea is to build out a consent-based platform in such a way that financial institutions, in particular banks, can access the business data of companies in such a way that they can better appraise the creditworthiness of those companies, in particular our SMEs, such that their financing cost and also the way they get financing can be made easier. So on that count, what government can do is provide the data, and we have a wealth of data in various domains that we possess, like, for example, the companies registry, which now in possession of over 1 million data regarding those companies. So we are looking into how we can feed that into this common platform in such a way that the banks can get access to the information. And with this information, they can better assess the financial position of the companies, in particular SMEs. And so as a result, they can rely less on the collateral of those companies, but rather on their business data and also on their business prospects to make lending decisions. So this is number one, it is open data. And number two, I think, is about policy and also cross-agency or cross-regulatory coordination. Like, for example, we have under our regulatory regime, SFC, MA, Insurance Authority, they are each doing a fantastic job in terms of pursuing innovation and regulatory sandboxes. And also at the same time, regulators aside, we have Invest Hong Kong and also a lot of agencies under the government, at the same time trying to bring to Hong Kong more players and more interest in the fintech space. So the next question to ask is how we can bring all these efforts together in such a way that a more coordinated approach can be sustained, and in such a way that we will restate a coordination group, basically, which I will chair. The whole idea is to identify the key areas where these cross-agency coordination is required, such that better policy and better initiatives can be crafted. Because what I see is that right now, there are a number of key trends coming up, like, for example, green, sustainability, at the same time, fintech, and also broadly impact investment. Yep. And underlying these investment themes, there are family offices and also a lot of high net worth families and individuals who are interested in these investment themes. So Hong Kong is uniquely placed to take advantage of these trends. Because you look at historical data, just the year 2020, the AUM managed out of Hong Kong has grown more than 20%. And with that AUM, basically more than 62% is from sources other than Hong Kong. So Hong Kong is already and will continue to be a wealth and also an asset management center. And that aside, another key theme that we're trying to pursue is about risk management. I think COVID and also climate change, and COP26 is now taking place, really presents us with new perspectives in terms of how we look at risk. Because previously, people look at financial means of financial resources or financial services as a means to create wealth and create value. And that's actually the case. But apart from value and wealth creation, we also need to look at risk management. And that's why today, I'm sure that many of our participants will be able to see many of the innovations taking place in our InsurTech space. Because insurance and also broadly risk management is getting important and also becoming a very prevalent theme as an investment and also as a tool. So there's something that we hope through this coordination effort, we can have a better coordinated approach to this fintech system. And finally, apart from open data and also coordination, it's about people. And if you look at the policy address, we have put a number of areas of measures, try to grow our talent. And I see talent in 3 areas. First of all, is to identify and also grow our local talent. And secondly, is to reskill our current professionals. And thirdly, is to bring talent from abroad. And on the first 2, first of all, we are now working with our colleagues in the government to enhance our qualifications framework already in place to build in the fintech element in such a way that people in general, in particular, the employers and employees, can have a reference point. When they try to gain their fintech expertise, they will know at what point those qualifications will mean for their overall qualifications. And the second initiative that we are pursuing is in terms of trying to reskill our current professionals. Because fintech, to me, encompasses 2 areas, fin and tech, and we need to bring them together. And one way is to make sure that our current financial professionals are well equipped, not just of today's knowledge, but knowledge for the future. And that's why we will bring to them experts and also key leaders in the theme of fintech, insurtech, in particular wealth tech, so on and so forth, in such a way they can be well abreast of the latest trends and put them in practice in the daily workplace. And we'll put resources to Cyberport to ask them to help us to do so. So all in all, it's a 3-pronged approach as of now. People, data, and also policy coordination so as to grow this ecosystem further.
It's really exciting to hear that. This provides a backdrop for the growth and the innovation in Hong Kong.
And in fact, Lei, as you highlighted, there are many interesting investment stories that you have just shared with us. And I know that you are a big fan of wake surfing. So how do you see those personal passion of yours being translated into your investment approach and philosophies?
Yes, I'm a big snowboarder and I'm into living in Hong Kong for 10 years and also very much enjoy hiking and some water sports as well. That I think it's really, I see some similarities, right? When you snowboard, what do you learn? Lesson number 1, you learn to stand up where you fall, right? So that's, and when wake surfing, you also have to overcome all those, some of the turbulence in the water. I think that having that ability to continue to adapt, that's what we see the common traits among entrepreneurs. And for investors, I think how do you work with the best entrepreneur, enable them to realize their full potential? That's what we are most excited about. So I think these, I'm looking at the successful cases we had versus the lessons we learned on investing. It's all about whether you can have the time, what we call able to have the capacity to spend quality time with quality people. So I think this is a very exciting era for innovation. I just see prospect ahead.
In fact, I'm sure many people will be interested not just in your success stories. You highlight lessons to be learned or lessons already learned. Are there any, I would say, failures or less successful stories that you can share with us in terms of key takeaways, such that in terms of you building up this whole portfolio of Hong Kong-based innovation companies, any sad stories or relatively unsuccessful stories you would like to share?
Yeah, that's really something that we constantly go back and is that really haven't realized their full potential. That if you could look at them, I think there are many varieties. But a couple of things that I wanted to highlight. One is there are many varieties. But a couple of things that I wanted to highlight. That if you could look at them, I think there are many varieties. But a couple of things that I wanted to highlight. One is a lot about whether entrepreneurs can go beyond themselves. Just not about, I'm Superman, I can do 24/7, but also I can nurture talents around me, I can recruit and bring the best people around oneself. I think that having that capacity is very important. And finally, I would say still the people side is about that empathy, that feeling being connected. I've seen some entrepreneurs who become high-flying, but the flip side to that is they got disconnected. They got disconnected with their own organization. They got disconnected with the ending customer that they're servicing. And many of them are much, less successful. And how do you still being connected with that? This is something that we continue to see that innovation helps bringing out the best of people, but also you don't want them to lose the origin where they start from.
Yeah. I think what you said seems more like not just about investment, but about life at large.
Right.
Like being focused on what you really are, being true to yourself at large.
Right.
Like being focused on what you really are, being true to yourself, yet at the same time continuously adapting and continuously learning. Yeah. So I'm sure that many of our fintech companies here in Hong Kong, there are more than 600 of them. They are also looking for investment opportunities and also investors like you. So is there any advice that you can share with them in terms of the fintech companies here in Hong Kong? What are the specific sectors that you see that is of particular strength here and also particular potential in such a way that they can focus on those areas and make them stronger?
Yeah, absolutely. Well, there's a broad range of innovation happening across the fintech sector. You could build the next best, most trustworthy brand in a particular segment of fintech, and you could be a tech-enabling software services that serve a particular segment. If you think about the fintech innovation, essentially, you unbundle a lot of traditional financial services and trying to repackage them in a technology-efficient way. So I think, how do you do that? How do you unbundle something? How do you repackage something? I think what's looking behind that, it's all about whether you can either make it more efficient and whether you make it technology. And because once you have technology, then time is your friend. You can keep on innovating. And when you have the best risk management not just in the sense of managing the particular risk of what you do, but also look at the whole value chain. How can you help the whole value chain to be much better risk management systems? I think that across this whole arena, we see opportunities set. And also Hong Kong is a super connector. I think that Hong Kong doing business out of Hong Kong cannot go beyond Hong Kong. And, Greater Bay, I think there's huge opportunities out there. And, actually I'm going to pose a question for you about Greater Bay and our initiatives. And to the outside world, to global. And we invested actually a software company, Hong Kong local entrepreneur, now potentially adding a lot of fintech functions into the businesses. Because they really looking through the whole package, the whole suite of products and services, they say, wait a minute, how can I service my customer better? Instead of saying, okay, this is what my competitor be doing, they say, actually, we could add that risk managed digital wallet so that my customers can feel safer to be and more integrated with my services. I think we are seeing a broad range of opportunities, but in the end, it's about whether you can leverage technology, particularly software, to unbundle the products and repackage them together. Mm-hmm. But talking about the opportunity set for Hong Kong talents, I think they should look beyond Hong Kong. I mean, based out of Hong Kong, but look beyond Hong Kong. One of the big growth opportunities actually is Greater Bay, and I noticed that the government has really is doing a lot. I noticed that the government has really is doing a lot about working closer with the Greater Bay, and Chief Executive just announced Wealth Management Connect. Maybe you could share with us some of the policies regarding the Greater Bay Area.
Mm-hmm. Time and again, I do see a lot of chambers and also investors in my current role. I think the key word that always pops up in the discussion is the word GBA.
Yep.
There's a lot of interest in there. And if you look at our GBA as compared with those already found elsewhere in the world, i.e. those in New York, Tokyo, and also in San Francisco, what I see is that we have the best of three of them in Hong Kong, 3 in 1. Yeah. Hong Kong is similar to New York, being the financial center. And in terms of our neighbor Shenzhen, is similar to what you see in Silicon Valley, in San Francisco. And what you see in terms of the advanced manufacturing capabilities of the Tokyo Bay Area, you can find them across the boundary in our Guangdong. And what you see in terms of the advanced manufacturing capabilities of the Tokyo Bay Area, you can find them across the boundary in our microscopically. better access to the economy, we need to continuously enlarge the catchment area of our service. And like, for example, you talk about making the pie bigger, such that everybody can get a better share and a bigger share. And that's exactly what we have been trying to do and will continue to do. And on that front, accountants is not something now we are working on. Hopefully, we can get them expanding their service provision in Shanghai in such a way that we can further export our professional services and financial services to GBA at large. Because after all, I think GBA, as part of the country, is a big hinterland for all of us. And Hong Kong being a service economy with over 95% of GDP driven by service industries, we have a lot to export and a lot to share and to be adopted cross-boundary. Because right now, if you talk about GBA at large, the proportion of tertiary industries, of service industries, is around like 60-odd%, which is still low vis-a-vis that of 80-something% for other international Bay Areas. So Hong Kong has a unique role to play. And back to today's theme, I think Fintech, as one of the key areas in financial services, is definitely significantly featured in this whole export of professional services.
Yes, absolutely. It's very exciting.
Featured in this whole export of professional services.
Yes, absolutely. It's very exciting for me to see that the development plan is very much ecosystem based. It's just not one area, but focusing on the services, regulatory sandbox, and the talent development and integration GPA. I think that's really very much a trend. We are seeing that. I think that's really very much a trend. We are seeing that helping the entrepreneurs grow, and that because you need this ecosystem, grow, and that because you need this ecosystem. As you said earlier, the locally developed reskill talents and the new talents, talent from abroad, but we have to make the talent grow the community, grow the talent. And also, I think the Hong Kong also has a unique advantage to be the super connector, that to be able to connecting to the outside world and also connecting to the GBA and the whole mainland China. I think that if we could leverage that, developing talents, developing the sandbox and the regulatory framework and leveraging the super connector, we have a big chance for Hong Kong to be the global financial center for Fintech.
I think it's just very well said, and also very much in line with what we have been thinking. Because if you look at what we have proposing and adopted, I think we will try, because if you look at what we have proposing and adopted, I think we will try to see what are the key areas we can focus on to grow this ecosystem. And people definitely is one area, and we have the particular talent program in place to bring in global talent and also groom local talent. And at the same time, to talk about like innovation, and Hong Kong, as you said, is genetically determined to be an international financial center. But that said, many of the success factors are not international financial center. But that said, many of the success factors are not just relevant financial center, but also for technology, like our protection of intellectual properties, our rule of law, our arbitration system, so on and so forth. All these are relevant and prevalent, not just in the financial services space, but also across different areas of business and financial professional services, like technology, like trade finance, so on and so forth. And that's why, as I highlighted at the outset, we already have in place a number of initiatives. And one thing that has been proven quite successful, which also in display in this FinTech Week, is about our achievements in the proof of concept subsidy program. So the whole idea for us is to link up the established financial institutions with the FinTech companies here in Hong Kong through a financial subsidy. Because as you can see, right now for many of traditional financial institutions, there may be certain inertia to take on something totally new.
Yeah.
So for us, as the government, we have to put in the right incentive in such a way that we can incentivize them to take on something new and also to see how it can be adopted within the organization. So with this proof of concept subsidy scheme, we bring them together. A fintech company has to partner with a financial institution and present us with a joint application for that subsidy. And also we particularly build in a cross-boundary element, which is the GBA. And we see that the results have been encouraging. And so far, I think we have around more than 10 applications cross-boundary. And also, all in all, we have approaching 100 applications for this whole scheme. And many of them, highlighted by you as just now, is regarding enhancement of user experience, about how InsurTech can facilitate better claiming process, and also how, for example, in particular, WealthTech can enhance the overall payment and also wealth management experience of individuals. Yep. So there's something that very encouraging, at the same time very visible in terms of what the government can do and will continue to do to bring about tangible impact and also result in the fintech area.
Yes, absolutely. Particularly on the talent development side, I would say if we could all work together, the industry, the government, and the universities and the community, somehow we bring more internship to the students for them to maybe work in Greater Bay. Work in different places and bringing out particular
joining us today to share his ideas. So please welcome Yi Gan, Governor of People's Bank of China. Of People's Bank of China. Let's see it. Of People's Bank of China. Let's see it.
Thank you, Eddie, for inviting me. I'm glad to traffic could accumulate data and acquire new customers. They could enjoy steady data flow if customers remain loyal. As a result, big tech have increasingly gained require consumer to hand over personal information in exchange for financial services. At the same time, financial institutions are required to collect, use, and store information for legitimate purposes, and in strict accordance with the principle of lawfulness and the minimum necessity, to protect privacy when using personal information for commercial purposes. On September 30th, the PBOC issued the administrative guideline for credit information business. It defines personal credit information and regulates credit information business, from data collection to processing and sharing. Fintech companies are also required to carve out their personal credit information units and provide such services to financial institutions through licensed entities. Going forward, we will continue to improve the legal framework for personal data protection in the financial sector and strengthen regulation accordingly. Lastly, let me share some thoughts with you on strengthening personal data protection. First, a sound legal and regulatory framework is a cornerstone of personal data protection. With a legal system up and running, regulation will be carried out by government agencies in China in accordance with law. Second, the ultimate purpose for data protection is to promote its proper usage. On the premise of protecting personal privacy, we will try to define data ownership in a more accurate manner, facilitate data transactions, and promote fair use of data to unleash the vitality and innovation capacity of market players. Third, data protection calls for international cooperation. Given cross-border, cross-sector, and cross-region nature of Fintech, national authorities, including legislative and judicial and administrative bodies, should strengthen domestic and international coordination in such fields as antitrust, data, and consumer protection. In particular, we should join hands to set standards for personal data protection. Ladies and gentlemen, let's work together to better address the challenges posed by Fintech to personal data protection and harness its power for good. Thanks.
We always appreciate very much that our speakers, despite the fact that perhaps they cannot be here with us, they're always connecting and that they send their messages. Coming up next, have you ever wondered how to attract international finance firms whilst developing a regional fintech industry? Why the Greater Bay Area might be the answer to the talent shortage? How Hong Kong and the Greater Bay Area has become a powerhouse to innovate for financial services and fintech. Our next session on Hong Kong and the Greater Bay Area as a digital finance hub will answer these questions. And to lead the conversation, please welcome on stage our moderator, Enoch Yu, Chief Reporter, Business, South China Morning Post, in conversation with the Undersecretary for Financial Services and the Treasury, Hong Kong Special Administrative Region, together with leaders of AMTD Group, Big Rock Capital, and Tencent Holdings Limited, Fusion Bank Limited. Welcome them here on stage.
So welcome, everybody. Here today we have this panel. We welcome Joseph Chan, Undersecretary for Financial Services and the Treasury. Also with us, Jim Lai, he is Vice President of Tencent Holding and Chairman of Fusion Bank. Online, we have two guests. Okay, we have Mr. Kelvin Choi, Chairman of AMTD Group, and also Alfred Shen, Managing Partner of Big Rock Capital, who's joining us from Shanghai via online. And okay. So actually, today we are talking about Greater Bay Area. I think now is a top topic. Beijing unveiled the Greater Bay Area blueprint in February 2019, and this area has 72 million population and an economic output of US 1.7 trillion. Actually, if it's a standalone economy, it is bigger than Canada and just behind Italy. So I want all of you to share your view. How do you think such a big market, would that be able to attract international fintech company to invest in it? So maybe Joseph, can you start?
Thank you, Anna. Good morning, everyone. My pleasure here today at Fintech Week. As Enoch mentioned, right, the size of the economy is enormous in Greater Bay Area, and it will require a lot of financial services. And in return, they will require new innovative products and services from fintech companies as well. So definitely it presents great opportunities to fintech companies in the Greater Bay Area and will attract international investors to invest into it. Apart from the size of the economy itself, there are also a lot of cross-boundary opportunities coming up, right? So for example, in September, we have launched the Wealth Management Connect. So it's the first time that the mainland local residents could actually invest in products offered by offshore financial institutions. We are working on the insurance after-sales service center to be launched in the Greater Bay Area. And also we are studying, right, the potential future use of cross-boundary ECNY. So all these are exciting opportunities that will attract international money to invest in the fintech sector in the Greater Bay Area. And I have to say this only the beginning. Well, across the Greater Bay Area, you will see that Hong Kong is in a very unique position because under the one country, two system, we are the international financial center of our country, and we are the international financial center of the Greater Bay Area. So when foreign investors come in, when they want to invest, what we offer, right, as our core strength is free flow of capital, free flow of information, common law system, and also a low and transparent tax regime as well. So these are the competitiveness that put Hong Kong in a very unique position to play our role as the gateway to the mainland market for the international investors and international funding. Apart from this backdrop, I would also like to highlight that we have also high-level policy supporting our role. That includes the opinion on providing financial support for the development of the Greater Bay Area promulgated last year. It supports further promoting financial liberalization and innovation and deepening financial cooperation between the mainland and Hong Kong. And that opinion also supports Hong Kong participation in the opening up of the mainland's market as well. And then if you look at the 14th five-year plan promulgated earlier this year, it also supports Hong Kong to enhance our status as an international financial center and supports the deepening and widening of mutual access between financial markets, Hong Kong and mainland. So you see that in terms of the natural position, in terms of size of the market, in terms of policy support, they all point to the direction that Hong Kong would be an excellent entry point and gateway for international money in the Greater Bay Area fintech. The last point I would like to mention on this note is that the Hong Kong SR government is also very committed to developing the private equity business and the venture capital business locally, because these are crucial parts of the entire investment ecosystem for fintech and startup as well. So we actually have launched a three-step approach to promote this business. So last August, we launched a new limited partnership fund regime to boost our business in that area. And within a year, over 300 funds have already registered under this scheme, this regime. And then in April this year, we passed the legislation to offer tax concession for carry interest. And then also earlier, we have already passed the legislation for creating a mechanism to help foreign funds to redomicile here in Hong Kong as well. So all in all, you will see that we believe that this is the right role that Hong Kong to play to support fintech investment, and we have the high-level policy and local policies to support this development.
So James, can you share your view?
Yes, good morning. I agree totally with Joseph that Hong Kong and the GBA has a lot of advantage in fundamental attractiveness to attract international investors. And I would like to add a few points that there are several factors that affect the ease of doing business in any jurisdiction, with the most important ones being consistency of government policies and infrastructure readiness. The GBA, particularly Hong Kong, meets the above preconditions. Our government's policies in the fintech area have always been facilitative of sustainable innovations. New financial infrastructure, such as the FPS, faster payment system, and the commercial data in exchange, CDI, can allow businesses to leverage on network effects to achieve greater efficiency. This removes the need for individual players to establish bilateral relationship with each customer and reduce wasteful duplication of industry resources. Our infrastructure readiness will mean that industry resources can be directed to high value-added work, attracting quality international investors to invest in the fintech sector. Coupling with the fact that the GBA has a combined population of over 70 million, the GBA presents a huge market opportunity with unmet demand. It is on this basis that I think the GBA will continue to attract international investors.
So I want to move online. So Alfred from Shanghai, can you tell us what do you think about Greater Bay Area?
So thank you for the invitation. And I think I myself is a very good example of how attractive the GBA is. I'm from Hong Kong. I'm now residing in Shanghai. And our fund company, Big Rock Capital, on the local jurisdiction is set up in Shanghai, Shenzhen. So we are actually a good combination of how the GBA region attracts us. I'm very optimistic about the developments of GBA and its ability to attract foreign investment as well as local investment. Now, specifically for the world of Hong Kong, I think Joseph and Jim talk about the overall stability of the policies, the role of Hong Kong as an international financial hub, and all the great policies that the government is introducing to encourage VC and PE investment, and also in fintech. And I think all these are great. To us as a fintech investor, we think that the role of Hong Kong will increasingly be important, particularly in terms of helping Chinese companies and customers to expand and travel to overseas. Now, obviously, the Chinese market has a lot of great companies now. GBA, in particular, is the hub for manufacturing and technology. And all these great companies are expanding overseas. And Hong Kong increasingly will play a very important role to help all these companies to expand to Southeast Asian market, to European and the United States, and become a global company. Now, we at Big Rock, we've actually put actions in the market as well. We invested in 1 Degree, which is a Hong Kong insurtech company. It's a licensed insurance company, now received the license from the Hong Kong IA, and also have businesses in pet insurance, home insurance, and increasingly will expand into cybersecurity. We also put money in a cross-border supply chain company that's now listed on the Hong Kong board called Link Logics. So we are very positive about the developments of the GBA, and specifically on the role for Hong Kong.
So Calvin, can you also share your view with us?
Absolutely. So very happy to be here to see all of you. I think, from my end, it's also coming from a practical standpoint. So I think as a business builder, building our AMT group over the past several years, as an entrepreneur, and also as an investor into fintech. So I look a lot into the overall market magnitude size, people, and also opportunities to collaborate. So in GBA, you have every ingredient for success. That, for several areas, of course, the market magnitude size, I think, Joseph and everyone have been talking about it. That is a huge size, and 1.7 trillion, US dollar GDP. But the market volume and the size is growing. I mean, out of the overall close to 80 million population. So there are a lot of areas to surface, area that you could create newer businesses to serve any gap, for any opportunities, to fulfill the user requirements. I think more importantly that I think as a company, we look a lot into talents. I think fintech, as we look at the name, is not just tech, but fin as well. So financial services plus technology. So you need lots of creativity, innovations, thinking, but people talents. So that I think we focus a lot into it. That about 2 to 3 years ago, we partnered with the Polytechnic University, creating Hong Kong's first fintech academy. With support from Hong Kong government, now they're giving our PhD degree in fintech. We focus a lot into talents cultivation, but then a lot about how many talents that we could approach, groom, and support and to create leaders for tomorrow. But then, look at the whole magnitude size again, right, for GBA. So there will be a lot of talents not only to supply and to equip for the Hong Kong market, for GBA, but for the rest of Asia. And now that the whole world, we are talking about regionalization. So Hong Kong and GBA will be very important in terms of how we supply the right talent as the hub for Asia. And I think, ultimately, I think, it's also about the tools and mechanism. So thanks to the Hong Kong government, I think Alfred talked about the virtual insurance. So we are very glad that together with Xiaomi, we have the opportunity to obtain one of the 8 virtual bank license. Now that the AirStar Bank has been up and running for more than a year. But then you can see that a lot of changes, but then providing more choices and opportunities to better the user experience. So ultimately, I think, benefits, to the vast market, but at the same time create more diversity and options.
Well, I want to be more specific. What type of company do you particularly have higher potential growth in this Greater Bay Area? Maybe I think we start from the other direction. Like I think from online, Alfred, can you tell us more about this?
Sure. So first of all, I think there's going to be a lot of opportunities in different verticals and different subsegments. But to us, we are currently looking at supply chain finance. Now, the key drivers would be, as I mentioned earlier, the Greater Bay Area, specifically Guangdong and Shenzhen. They are global manufacturing hub. They are very innovative on the technology side, on manufacturing, and also on import and export. And as we look into innovations and adoptions of technology, increasingly there will be more IoT in the market, Internet of Things, more AI, more big data, and the transportations of physical goods and also the import-exports along the supply chain will increasingly be digitalized. So historically, traditionally, commercial banks and insurance companies are not able to surface the supply chain sector because of the lack of data. And now with AI, with IoT and blockchain, we'll see more opportunities for the financial services industry to catch up and to provide the service and funding needed. We've done some research, and if we look at the total supply chain finance size in China right now, the total market size is about RMB 15 trillion yuan. That's actually pretty small compared to the size of China. The funding gap for small and medium-sized companies in China is about 20 trillion RMB. So there's a huge funding gap for financial institutions to fill, but there's no data. There's a lack of technology, a lack of data, and we're seeing a lot of investment and innovations in this sector. So supply chain finance is one area that we are very positive on, and we think that the GBA, being the regional, and by regional I mean Asian hub for import and export and manufacturing, we'll see a lot of opportunities there. Another area that we'd like to see more innovations, it's around digitalization of industrial companies. So we've observed that for a lot of great companies and corporations, there are key corporate functions around CFO, procurement, CRM, manufacturing, and whatnot. And Fintech, the first step is really to try to make the CFO function easier. So make the treasury function easier, make the accounting function more automatic. And we are seeing an impact on digitalization across all these key functions, including how they acquire and service customers, how they provide the best-in-class customer experience, how they automate the procurement process to improve the transparency on the pricing, on the supply and demand, and also on the overall manufacturing processes. Now, as all these industrial operations are being digitalized, again, there's going to be more data on the big data, on the AI, and on blockchain that the financial institutions will be able to follow up and provide the right services and solutions to them. Now, for GBA and also for Hong Kong, the fintech startups will have a key role to play here because they will be able to innovate and become and be the bridging gap to break the data silos. They'll be able to introduce the digitalization solutions to all these manufacturing companies, digitalize the process, break the data silos, integrate between the asset sides, the companies, and also the financial institutions. And Hong Kong specifically, because of its unique position as a global financial center, it has a great exchange board and also the channel for funding for US dollars and also for securitization. We do see that increasingly there will be opportunities for Hong Kong financial fintech startups to tap into this digitalization sector.
Well, as you said, Hong Kong actually has been a home for 600 fintech companies and startups, and it also an international financial center, as we have over 150 banks and also 8 virtual bank and 4 virtual insurance. So here we are honored to have 2 gentlemen who are actually head of virtual bank. So I would particularly like you two to share your view. How do you think the role of Hong Kong in this as a fintech hub in the Greater Bay Area? And maybe you can share your experience. I think maybe Jim, can you talk about first, because you are chairman of Fusion Bank, one of the 8 virtual bank in Hong Kong.
Thank you. I think one of the key roles for the banks in Hong Kong, in particularly the virtual banks, to play and to succeed in the GBA is to be a connector. And I would like to applaud to the regulators in Hong Kong. They have laid a very good foundations, very good policies, and make financial infrastructure ready for the banks to play a connecting role. We talk about FPS and CDI, and also I think in this FinTech Week, Hong Kong May will be announcing a lot of new initiatives in CBDC, a central bank digital currency, such as the ongoing Project Internon Line Rock, the Enbridge project, and Project Aurum on retail CBDC in Hong Kong, the HKD, Hong Kong dollar. While these projects are still in its nascent stage, I would like to applaud Hong Kong MA's continuous efforts in future-proofing our financial infrastructure to facilitate real-time domestic transactions and cross-border interlinkages. These efforts will make it easier for GBA fintech companies to expand our businesses beyond the GBA region once these projects reach a more mature stage. As many economies are striving for a leading position in CBDC, I am confident that Hong Kong MA's initiatives will strengthen our competitive edges as an international financial center to connect our fintech companies with GBA and with the rest of the world. As for virtual banks, I think each one brings in different capabilities and different ecosystems. For Fusion Bank, for example, our shareholders include Tencent, ICBC, and Hong Kong Stock Exchange. So each brings in different ecosystem. We think that, for example, Wealth Management Connect is a great opportunity for banks and financial institutions to grasp this opportunity to tap into GBA. So for Wealth Management Connect, we will be working with the WeChat Wealth Management platform, Li Cai Tong, in China, which already have 900 billion RMB AUM and 200 million investors on the platform. So talking about the size of these big platforms, if we can leverage the existing policies of the Wealth Management Connect and bring in, on the southbound side, bring in a lot of new investors to Hong Kong. And on the northbound side, we see in China assets like money market funds that leverage the high yield of the renminbi products. It averages about 2 to 3%, very low risk asset, very secure, and high liquidity. And these assets will be very attractive to Hong Kong-based investors. And leveraging unique ecosystems for each different virtual banks, I think will bring us a very vibrant growth in different areas, in particularly the wealth management side.
So, Kelvin, can you also share your view about the futures of virtual bank and also the role of Hong Kong in the GBA?
Absolutely. I think as for virtual bank, I think it's of course new licenses as we said, given by the Hong Kong government. At the same time, I think it's a creation of new businesses. So I think, doing business creation or as founder of businesses must be doing the right thing, with the right opportunity, at the right time. So, now that it cannot be, the more than the best time that the GBA, I think, as Joseph pointed out, the Chinese government and Hong Kong government have been giving lots of, the incentivized measures, national policy approach, I think, to support the GBA growth. So, I think, also as, pointed out by Mr. Zhang Lei, I think earlier this morning, for the conference, it's really about how we grow the pie together, or make it bigger. So now that the GBA pie, has been, huge, but have been growing a lot, bigger, I think in fast pace. And so for digital bank, for virtual bank building, and also virtual insurance and, lots of the licenses and tools, we are seeing a huge market. So we have lots of confidence, building this, from Hong Kong at the right pace. I mean, Hong Kong, the most international center, world center, I think, and also, from China, connecting the East and the West. I think there are lots of diversity of businesses that we can connect and create. I think at the same time, I think as creating new businesses, especially for Fintech, it's really about, doing partnership approach, ecosystem approach. So I think for the past several years as I built out AMTD, I focused a lot into not thinking about, building out traditional financial services company or traditional company. I focused a lot into building a network of relationship, or in terms of what I call the ecosystem. We call it, ourselves the AMTD spider net. So connecting through everyone, so through our spider web, but not giving out poison, but we're giving out, vitamin, enable GBA, a big pie, but then connecting through from GBA also to the rest of the region, including the ASEAN market. So we place lots of focuses also looking into the ASEAN market, invest, build, and also create the connectivity. So I would think of in a way that, now that with the right tools, not only with the license, but also the Wealth Connect. And also recently, I think in October, the PBOC and HMA announced the sandbox, the network link, or the one platform approach. I think everything providing the right tools, for success, but also allowing for more of a trial and error. I think in this big market, I think for everyone with the right creativity, innovations, to post, some bigger success.
Well, I think talking about Connect, we have just have this Wealth Management Connect start in September. 19 banks involved in it. So definitely, I think, Joseph, you can talk about how do you think this first cross-border trading scheme focused on Greater Bay Area will have impact in Hong Kong?
Yeah, thank you, Anna. Absolutely. Well, as we all know, the Wealth Management Connect is a policy breakthrough, right? Allowing the Greater Bay Area residents, including those in the mainland city, to invest in products offered offshore by financial institutions in Hong Kong. And this, of course, gives tremendous opportunities to Fintech and financial institutions in Hong Kong to penetrate into the pocket of the Greater Bay Area mainland cities. And at the moment, right, we begin with more low-risk product per se. But if you look at other Connect program in the past, such as the Stock Connect or Bond Connect, usually after certain time of smooth operation, then you expect them to grow further with breadth and depth across more products, or probably with larger quota as well. So I think this is the direction that everybody is looking into. It's just the beginning, and that promise more opportunities. And I would also like to highlight that it does not only offer opportunities to, say, the banks or the fund managers on the intermediary level, but the entire downstream, be that risk management, product development, we're talking about middle office, back office, IT support, and Fintech companies who would provide Fintech solutions to facilitate these services will be benefited as well. So it's a huge opportunity. I also would like to touch on the role of Hong Kong, since my colleagues on the panel also mentioned about how Hong Kong connect Fintech companies between mainland China and also the West as well. I think we always play dual roles in Hong Kong. One is the role that I mentioned early on, which is we facilitate investment, right? So the mainland Fintech company can use Hong Kong as a hub to attract foreign money because of our very mature capital markets. And of course, we are indeed leading the league table, be that IPOs, be that Asian international bond issues, be that cross-border wealth management center, Hong Kong top the league table in Asia. So very naturally, we can serve that purpose. But the other angle I would like to touch on is that we are also an ideal place for fintech companies to develop their business cross-boundary or linking between the East and the West. So if you look at Hong Kong, we are the international financial center, right? In the September Global Financial Center Index, we rank #1 in Asia and #3 in the world. And what does that mean? That means a lot of financial institutions set up their Asian regional headquarters in Hong Kong or the biggest Asian business presence in Hong Kong. So to the fintech companies, that means tremendous access to not only investors, but also tremendous access to potential clients and potential business partners as well. So we see a lot of mainland fintech companies set up the international headquarters in Hong Kong and use Hong Kong as a springboard to branch out the business overseas. And likewise, we see a lot of international fintech companies set up the Asia headquarters in Hong Kong and use Hong Kong as the gateway to develop the business in mainland China and also Greater Bay Area. And on this note, the last thing I would like to mention is that that's not a new pattern, by the way, right? If you look at how the traditional financial institutions work in terms of banks, in terms of fund managers, a lot of mainland fund managers and mainland Chinese banks also use Hong Kong as the international headquarters. If you look at international banks and international fund managers, they also use Hong Kong as the regional headquarters for Asia and penetrate into China as well. So I think it's a very key role that Hong Kong can play for many years to come.
Well, that sounds all very interesting and exciting. But we all know because of the pandemic, now the border's still closed. So I think that actually is a big challenge, talking about integration in the Greater Bay Area. And I think maybe that's why Alfred cannot join us in person today. So maybe can all of you share your view? How do you think about the pandemic affects the Greater Bay Area's development? And also, finally, what do you think will be our biggest opportunity and challenge in 2022? So maybe Alfred, can you start?
Sure. So the obvious challenge is obviously in travel because fintech or financial services depends on the flow of people, goods, and capital. And now with the pandemic, we've cut off travel by people. So we will have to double down on namely the flow of goods and also the flow of capital, which are borderless. And I think fintech can both capture the opportunities on these two particular elements, the flow of physical goods and also services and also the flow of capital. The challenges, I think, would be how to, because we always talk about fintech, but increasingly there might be an angle to look at it from a tech-fin angle. So meaning for fintech companies,
just as what Joseph has mentioned. So also the international companies, would, now put their regional hub in Hong Kong, or as the gateway or connector, for the East and the West. I think secondly, I think it's really about finding the right people. So even though GBA, we talk about over 80 million of population, but then finding the people is not finding every people or any people. It's really finding the most specialized people, either with the tech skills or fin skills or with the fintech skills, right? So then, I shared a bit earlier on, the fintech school that, we created with the Polytech, also together with Xiaomi and also, with other Asian university, where we created what we call the XC program. So AXSI, that is exactly, program that we want to groom the leaders for tomorrow for this digital age with the right innovation, with the right approach to think. It's really about, again, right, the connectivity, in between people, either virtually or, in person. So I think it's with the right approach, with the right mindset, with the right innovations. I'm very confident, about the future for Greater Bay and especially for Hong Kong.
So James, Tencent based in Shenzhen and you are in Hong Kong. I am sure you have a lot to share about how the pandemic affects your life. And also, again, please tell us what do you think to be the major opportunities and challenge in 2022?
Sure, thank you. Working in Shenzhen and Hong Kong and living in Hong Kong, I used to travel quite frequently between Hong Kong and Shenzhen, maybe 2-3 times in between in a day. And with the pandemic, we cannot travel, and a lot of work and different communication has to be done online. So it really changes the way that we live. But on the same time, it brings opportunity. In fact, during the pandemic, we see that the Hong Kong government has done a lot to accelerate the expansion of our fintech industry and also to bring recovery to the economy. As an example, we see the successful rollout of the Hong Kong Consumption Voucher Scheme, led by the Financial Secretary, where the top 4 payment service providers recorded a staggering 3 million new customers and onboarded 65,000 new merchants to accept e-payments. I would like to reiterate the importance of public-private partnerships in ensuring a sustainable growth of our fintech industry in the region. We will continue to work closely with both authorities to address other structural changes going forward. As for the challenges for fintech in general in GBA in 2022, one of the major challenges, in addition to the challenges brought by our speakers, I think cybersecurity is a key concern. As small businesses seize the opportunities that come with digitization during the pandemic, it could leave them more exposed to emerging cyber threats. This includes fintech companies, especially smaller ones, that may not have adequate cybersecurity capability to respond and recover from a cyber attack. I think the fintech industry as a whole should continue to work together with our regulators to intensify and uplift efforts to address cybersecurity issues in 2022. As for opportunities, I think it's worth paying close attention to the cross-border fintech sandbox and the Wealth Management Connect scheme. As these initiatives are the first of its kind in the region, there could be some challenges in the initial phase of operation. It is important for fintech companies to learn from these challenges and adapt our operations based on these lessons. When fintech companies are included in these cross-border initiatives at a later stage, we can thrive amidst a competitive landscape. Thanks.
So last but not the least, Joseph, can you tell us how do you think about the business opportunity and challenge in 2022?
Sure, thank you, Enoch. In terms of challenges, I think my fellow panelists have stated already, and instead I would like to try to address them. Well, first about, of course, the cross-boundary travel under COVID is a challenge to everybody. So the Hong Kong SR government is working very hard with the relevant authorities on the mainland on this topic, on how what measures required or how we can resume certain cross-boundary travel. So we're working on that. And the other topic mentioned about is the talents. Indeed, right? If you look at fintech, relatively still a new area. If you're talking about finding someone with 5 to 10 years of experience If we rewind back 5 to 10 years ago, the industry wasn't that big back then. So what we need to do is more training and grooming new talents as well. In the Chief Executive's policy address announced last month, we've announced more measures on that. Well, we will study the development of professional qualification standards for the fintech sector under the qualifications framework, and we will also include more fintech courses to the list of reimbursable courses under the Continuing Education Fund. In addition, we will also examine with post-secondary education institutions the more active participation of fintech companies in the design of fintech program, including provision of student internship opportunities as well. And in fact, if you look at today, the tertiary education system in Hong Kong, 6 local universities are already offering fintech programs, be that bachelor or master. So definitely, we attach great importance to grooming fintech talents as well. In terms of opportunities, I think there were twofolds. One is fintech or financial service industry is to serve the real economic development. As Asia, as the China economy continue to grow strongly, it will definitely give us tremendous opportunities. Then secondly, is the opening up of the financial system of mainland China as well. Hong Kong is the international financial center of our country. So as the country opens up its financial system, Hong Kong is always the pilot ground and the testing ground and pilot cases for these new opportunities, like the Wealth Management Act and like the insurance after-sales service centers we're working on as well. So all these 2 dimensions will give a lot of opportunities for fintech companies to operate here for many years to come.
So we all hope next year will be better. So thank you very much for all of you to joining our discussion today. And thank you for all the audience to attend the session. Thank you.
Thank you.
Thank you.
Thank you.
Very interesting content, correct? And as our panelists mentioned, Wealth Management Connect, we will know more about this later on at the second half of our event. So make sure that you stay tuned. I'm sure that we all have had questions around how can our investments be more productive, but also how can they create a sustainable future? Our next session is going to answer that question, Green Tech, Investing for a Sustainable Future. And to conduct the conversation, I would like to welcome here on stage our moderator, Kenneth Hui, Head of Market Development, Hong Kong Monetary Authority, together with leaders of City Asia Pacific and EMEA, together with HSBC and Standard Chartered. Please welcome them on stage.
Good morning, everyone. Thank you very much for joining this panel on Green Tech, Investing for a Sustainable Future. I'm Ken Hui, Head of Market Development at the Hong Kong Monetary Authority. It's my pleasure to moderate this panel. We've picked a great time to do this discussion as world leaders are gathering at Glasgow at the United Nations COP26 Summit to discuss how to tackle climate change. Innovation and technology, as embodied in things like solar panel, green hydrogen, carbon sequestrations, etc., are very important in ensuring that we are able to transit from a world that right now emits 50 billion tons of greenhouse gas a year to a world that hopefully emits nothing, net zero, in the middle of the century. Innovation and technology are also very important in the field of finance to make sure that this transition is adequately funded and the resulting risks are properly managed. We have today a distinguished panel of speakers to help us understand how this transition works and how green, tech, and finance would interact. And they include Tracy Wong-Harris, Head of Sustainable Finance, Greater China and North Asia at Standard Chartered Bank. Tracy is also the Vice President and Deputy Secretary General of the Hong Kong Green Finance Association. And we have Jonathan Drew, Managing Director, ESG Solution, Global Banking at HSBC. And then we have Mei Yang Koh, Head of Real Estate Risk Management, APAC and EMEA at Citi. Welcome, Tracy, Jonathan, and Mei Yang. Without further ado, let's get started. I hope to start with you, Tracy. We know that green, sustainability, and climate change are affecting many aspects of financial institutions' operation and business. How are financial institutions using technology to help adapt to all these changes? How do you define green tech?
Thank you, Kent, and good day, everyone. Delighted to be here sharing a panel with good friends at the Hong Kong Fintech Week on green tech. So I want to share with you my own interpretation on green tech. So in my mind, there are two separate divisions, and I label them as Fintech versus Cleantech. So Fintech is where how technology helps financial institutions to advance the operational side, and with the extension on ESG. So let's take a look at a couple of examples. For example, supply chain. So how do we use blockchain AI technology to grab sustainability data and certification in order to scale up our own sustainable finance lending to our supply chain and SME customer to make it faster, cheaper, and having better, more robust data to avoid greenwash? Another example is very topical now, digital green bond. So I think some of you might have seen the press release came out from HKMA today on Project Genesis. So the idea is digitalize retail green bond and to have the buyer, so mums and pop on streets, to have real lifetime data on the environmental impact on your phone. Super exciting. But I'm not going to steal the thunder from another panel tomorrow specifically on these projects. So I encourage you to go to the panel tomorrow on Project Genesis. Now, on the other side, I mentioned clean tech. So clean tech is essentially environmental technologies like the solar, wind, biofuel, etc., where as a bank, we provide financing to our clients to help them transition to their net zero strategy. And from the business perspective, clean tech is one of the key strategic pillars for us driving sustainable finance. And last week, we came out with our own net zero plan. We committed $300 billion in green and sustainable finance, which clean tech will be a big part of it. Now, also, SC Venture, which is a platform to incubate innovations and financial technology, and again, not surprisingly, sustainability and inclusion is another key pillar. So a couple of example on the partnership that we gone into under the SC Venture. IoT smart metering. So it's how we partner with using technology to help water and energy efficiency for water service provider. And another example is AgriTech. So using technology to enable pricing transparency, connectivity, and the crop quality in food and agricultural supply chain as well. So encourage you to go to the booth outside on SC Venture to find out more. And in short, so green tech is core for accelerating the transition, and from both operational sides and also business strategy. So I stop here.
Well, thank you, Tracy. So it sounds like the impact of green tech is pretty wide-ranging. So let's zoom in on them one by one. I want to focus first on tax impact on banks' green operation. Mayank, if I can pose this next question to you on regulatory requirement. Supervisors, as we all know, are increasingly expecting financial institutions to properly identify, assess, and manage climate risk. As we know, climate risk is quite different from the traditional risks that banks face. So I want to get your thoughts on how technology can help here and can help banks to more properly manage climate risk.
Thanks, Ken, and great to be here in front of such an audience. I would say climate risk is a very new space for all banks. We've actually seen a mushrooming of regulatory requirements in the last 12 to 18 months, not just in Asia, but across the globe. As a multinational bank, we are exposed to all of those requirements. And so when we bring them all together, we realize the significant amount of gap that exists between what the regulatory expectations are and where we are as a financial institution. And I'm not just talking about myself. I think it's true for all banks and financial institutions. So the opportunity is there in terms of what needs to be done. Now, just trying to focus on the technology side of things and how that can help. Let me first try and put some boundaries around why climate risk is different. There are two specific aspects of climate risk which is different. One, it is long-term. So you don't get to see the impact of climate you may see some events, but the real impact of climate is medium to long-term. So maybe 10, 15, 20 years. And so that creates a lot of uncertainty in terms of the direction in which you would end up going, depending upon the actions that you take today. As a result, you need to do a lot of scenario analysis. Right? So you have one scenario where things may go in a certain way, other scenario where things may go in a certain way. And that basically means a lot of variables can change over a long period of time. That is a perfect opportunity for tech to come into play, right? So I see two areas where tech can be very useful. And thanks to HKMA, where we participated in a pilot climate risk stress test, we've been able to identify the opportunities where technology can be very useful. So I'll give you two examples. One is geospatial data. And how do you use that data to accurately assess where the potential impact of future climate events would be on your portfolio? I think that's a space where I see a lot of demand to get more accurate data on the physical location of properties, on the elevation, especially in places like Hong Kong, right, which has got so much elevation difference, right? So that's one space. I was reading somewhere that the amount of data that's available through satellites, we are only using 1 to 3% of that data today. So imagine if technology can be leveraged to use all of the data that satellites are capturing to do better predictions of where the climate is going to be. We will come up with better decisions, right, in terms of the impact of climate risk. So that's one area where I think technology can be very useful. The other one is model validation. So as we create our climate models to see how climate will impact our balance sheets, we are not able to use our traditional ways of validating our model, which was typically backtesting. Now, as we know in climate, what has happened in the past is definitely not reflective of what's going to happen in the future, right? So how do you validate models that you're creating because you cannot do backtesting, right? So this is an open question, actually, for all the tech people here. Is there a way that we can leverage technology to do better validation of models which are dependent on future events?
Thank you, Mayank. I think some of these issues, data, forward-looking model testing, we may be able to come back to them later on at our panel. Let me now move to you, Jonathan. Obviously, we don't just expect financial institutions to properly manage their risk. We also expect them to proactively finance and support the transition to a more sustainable future. So one of your key roles at HSBC is to advise clients on the structuring and financing of their green projects. So could you tell us a little bit more about your role here, your role as well as financial institutions' role here, and what are the kind of hurdles that they're facing?
Ken, thank you, and thank you to the MA for inviting me to this very important conversation today. And your question really goes, I think, to what today is the purpose of the financial system and those of us who work in that system, bankers, whatever we call ourselves. And I have to say thank you to Tracy for sort of setting out the map of the definitions of green tech and Cleantech, so we can now sort of use that map to sort of distinguish between, in a sense, the operational part, which 20 years ago we were all talking about, well, how do we go paperless in the office? And we fast forward to today and we're thinking about tech is fundamentally how do we interact with our clients. And in that process, very interestingly, very quickly, when we took green CDs to the market beginning in 2019 and subsequently, it's very interesting how the buyers of those, or our clients, have chosen to interact with us through the digital channels as opposed to through the traditional channels when they are acquiring that paper. So in that sense, you can see how digital and technology is creating a more efficient marketplace. It's putting the buyers and sellers together to transact around the products that they want to transact through. So in that sense, digital is already, you can see, starting to create new markets and improve markets for financial instruments. Tracy, I think, very well talked about sort of obviously how and I think where your question was going, Ken, obviously how our clients who are active in the physical world and who need finance to create the new assets in the physical world that will deliver whatever it is, the good or the service that was historically delivered at sort of with a high carbon or on an unsustainable or polluting basis, to transition to delivering that same product or the alternative zero carbon sustainable product. And of course that requires a lot of capital, and the market today, I think, has done well to develop this whole suite of sustainable financing products that sort of connect the capital that wants to make the sustainable investments with the entities who are using that capital and making those changes in the physical environment, whether it's through energy, whether it's through industrial processes, and so on and so forth. But I think the interesting part for this conversation is perhaps where finance can work with technology to create something new, something that either wasn't happening before or didn't exist before, to really drive this process forward. And I think there are a number of areas there, most of which sort of happens in that interface between the sort of the human world and the natural world, where things need to change. And I'm thinking, for example, for the whole host, for example, of smart city applications. So sensors and data that show when and for how often, for example, a building window might be open. And that's obviously degrading the environmental performance of that building as the heat or the cool goes out of the building. The sensor can then trigger the building's management to close the window. The data can be collected. The improved building performance can then be reflected to the financial investors, who can then attribute a higher value to that building that's managed in that way. It makes it more bankable, and that's why we've seen this, I think, huge surge of cash flow into those types of tech applications. So that's where tech and finance are working together. I mean, other examples could be in the area of waste, and I know there's some exciting projects going on at looking at not only how you create a platform for the trading of what formerly might have been waste, but actually is then turning that into a reusable product. So somebody's product that they didn't have a market, it would have gone to the trash, but actually somebody is willing to buy that, link that with a funding platform, and then you can facilitate a payment to enable that good to be both visible and then transferred from A to B, and the waste avoided, the new product and the destruction involved in that to be avoided. I know in Hong Kong as well, at the university has got some amazing projects going on using sort of like roadside pollution to create apps, so you can sort of plan your journeys to avoid the most polluted areas, obviously with a clear societal benefit for that. The other area that I just wanted to talk about very, very briefly, and to sort of finish on, is what we might call, and a new one for Tracy's map, climate tech. And this is really thinking about how we have sensors and collect data about the natural environment itself. So I'm thinking of monitoring, for example, what's happening with a certain species or in a certain natural habitat. And then if we can capture reliable data there, we can then show the benefit of the action that's perhaps caused the improvement there. So think of agriculture,
think of the use of fertilizers, the runoff into water sources, eutrophication, algal blooms. If you can measure the avoidance of the bloom, then you can reliably, then you can justify and calculate, monetize the benefit of the alternative agricultural technique. Another example, and thinking of COP yesterday, where, of course, we had this big announcement from governments that governments are going to, I think, committed to reduce methane emissions by 30%, and they're talking principally about fugitive methane from the energy systems as well as sort of methane in our agricultural systems. But of course, methane it's a colourless, odourless gas. Well, it's odourless until our friends at Town Gas sort of perfume it so that we can smell it. So how do you actually calculate this or assess this? And this is where I think Mayank's point comes in very relevant, because actually you can, through data captured via satellite, because you can see, not optically, but you can see the impact of the methane by the energy absorbed, the change in the hole, as it were, in the energy spectrum absorbed, tracked by the satellite data. So you can actually see where that methane is being emitted from. And so that tech, collect the data, process it, put it into the image that we can interpret, and you can very quickly see how now regulators can then use that to put financial penalties on those who might have caused that, or the financial system can use that as data, and there's another opportunity to put that into products such as sustainability-linked loans, so that then the financial system will then incentivize that improved performance. And I think what's key here around, and what's very interesting about some of this sort of climate data from climate tech, is that it's data that's very likely to be well trusted, because it's produced by technology, it's reliable data, and therefore it's good data against which to attach financial incentives and financial payments, and therefore you're creating a whole new potential set of capital flows to drive and deliver sustainable performance improvements.
That's very interesting, Jonathan, this integration of what you said about the human, the physical, as well as the financial world. I mean, it could really take what we know as finance into the next level. You mentioned one term, trusted data. I think that's very important, because a lot of what's hindering the development of green finance right now is the term greenwashing, whether the capital that are supposed to go to green and sustainable causes really are being channeled to such purposes. I want to pose the question to you, Mayank. How generally can technology help in addressing green finance before we reach the states that Jonathan just described? Today, for example, how can technology help here?
Yeah, and I was listening to Jonathan, and I realized that data is a common theme across everything that we're discussing today, right? And how do we make sure that it's accurate, it's captured properly, generated properly, used, analyzed properly. And so greenwashing, I can put it in that context also, right? So, but before I kind of talk about greenwashing in tech, I think we need to spend a bit of time thinking about what greenwashing is, right? So I'll give you an example. Hopefully it'll resonate with the audience here. So let's say I want to lose weight, right? And I say, I promise to lose 10 kgs over the next 2 years, right? So that's a commitment I've made. Now, 6 months down the line, I take a weigh-in, and I realize that I've actually put on weight rather than reducing weight, right? That, I would think, is equivalent to what greenwashing is, right? Where you say, I'm going to move towards a sustainable world, and I'm going to progress towards a sustainable world, but your actual actions suggest you're going in the opposite direction, right? If I actually put in a lot of effort, and if I only lose 1 kg in the next 6 months, right, I'm going in the direction of losing weight, but I'm not probably on track, but I still have time, right? Is that greenwashing? That's debatable, right? So I think we have to realize that greenwashing as a term is shades of gray. It's not black and white. But that's where the opportunity comes in for technology, right? And let me kind of put that in perspective. So there are two things that are happening simultaneously. There's a lot of new commitments that everybody is making, whether it's companies, governments, net zero commitments. So you have a lot of new data that is being created on promises, right? Like the one that I just made around losing weight, right? At the same time, there is data that Jonathan mentioned is getting created, technology, data, direct from source, trusted, which is actually giving you a sense of what people are actually doing, right? And greenwashing is trying to kind of see whether what you're promising to do and whether actually what you're doing is consistent, right? So technology has a big role to play in both. One, in terms of being able to analyze structured and unstructured data on all the promises that are being made, right? People are making promises at COP events right now. They're making promises in their TCFD reporting. So there's a lot of promises being made. How do you make sure you consolidate all of that and get a composite picture for a company? So that's one technology use. The other one is on actual performance. And that's where you go beyond what the company is saying and look at data from other public sources. So to give you an example, if you have data on where a company is spending dollars on lobbying, right? And you realize that they are lobbying for issues which are at contrast to the promises that they're making, then clearly that's an example of greenwashing, right? So I think that's where the technology is going to be very useful, both on capturing what promises are being made and then validating through actual performance through multiple sources.
That's interesting, the comparison of the actual and the promise, and see how technology can really fill the gap. I want to turn to you, Tracy. We've talked quite a lot about how technology can help financing and monitoring and all these related issues. But finance is not just about providing funding. It's also about providing incentive. And as we all know, one of the issues that we face today when tackling climate change is that the polluters don't bear the full cost of the harm that they do to the environment. How do you think things like carbon credit, for example, can come into play here, and how it could facilitate and promote the growth of green tech?
Thank you. It's a very important topic on carbon credit this day. So a well-functioned voluntary carbon market with high-integrity carbon credit can facilitate trillions of dollars from the emitters, which is the high-intense industry, to the one that helping to avoid, remove, sequester, and to reduce carbon. So looking at the high carbon intense industry like the power, oil and gas, or making steel or cement, and there are a number of cross-cutting technology that is essential to help in the transition process. For example, hydrogen, CCS, which is carbon capture storage, and biofuel. But these new technology need a lot of money investment, and the cost is very high. So let me take aviation as an example. An aviation association, IATA, came out and said the aviation sustainable fuel will facilitate 65% of the whole aviation's transition to net zero process. But the price is 2.5 to 8 times higher than conventional fuel. So how? So having a carbon price, also going back to the earlier point that Ken, you asked Jonathan on what are the key challenges from advancing technology in the financial field, it's the same thing. So having that carbon price will move the company's behavior towards make it faster and greater reductions now in moving that impact. So that is that. And then, but at the moment, the carbon credits is still varies a lot, the prices and the quality. And let me mention this new initiative that's set out by Mark Carney, TSVCM, the Task Force for Scaling Up the Voluntary Carbon Market. So this structure is set up to exactly to address that, to lay out the principle, the carbon credit principle, to build transparent, high-integrity carbon credits. And very happy to announce that the governance board that has been recently set up, Dr. Ma Jun, which is in introduction, is part of this independence board on this carbon credit structure. And also, don't worry if you're not familiar with TSVCM, because a new name is coming. It's being announced at COP during this week. So it will change name to ICVCM, High Integrity Voluntary Carbon Market. So, but either way, so this is a very important part of facilitating on the transitions. And last but not least, let's look at Hong Kong's role. So Hong Kong is in the best positions in driving and having a platform to promote voluntary carbon credits. Given that I think a lot of you have heard about our CE policy address, the emphasis on the carbon market's importance. And also, under the cross-agency steering group, a carbon market working group has been set up, co-chaired by Stock Exchange and SFC. So watch this space, and a study will be coming out end of the year about the study from this working group. So do watch this space. And with that, I'll pass it back to you.
Thank you, Tracy. We certainly hope that Hong Kong can play a bigger role in this carbon credit market. Jonathan, if you don't mind, I want to carry on a conversation that we were having at backstage about talent and capacity building. We all know that data is very important as an input to green, tech, and finance. But one other very important quote-unquote ingredient or raw material that we need in order to promote the growth of this industry is people. And we were talking about backstage that this is a relatively new area. There is really no formal or structural training. We don't even have enough trainer. So what's your thoughts on how we could make sure that we have enough talent and people to support the growth of this? I hope I'm not catching you by surprise, but I think it's a very important issue that perhaps we want to share with the audience.
No, as moderator, Ken, you're perfectly entitled to change the questions. And thank you for that. And I'm going to lean on the comment that Mayank made earlier, that of course this is part of the same challenge, that sort of what's behind us or what we see in the rearview mirror doesn't really bear much resemblance to what we're going to expect to happen going forward. And that's the same for people. So a lot of that accumulated experience will not be relevant to the issues that are in front of us. So when you talk about capacity building, the thing that always goes into my head, well, who's the professor or the tutor or the teacher who's going to stand up and teach and train, and are they really qualified to do that if their knowledge they're transferring is based upon experience? And so I think there's a sort of a new way of learning and thinking and building capacity that we need to think about, as well as obviously there are going to be new techniques that will need to be adopted if we're going to be successful. And I think the biggest one is actually the ability of people to manage uncertainty. Because we can't look backwards. We can't say empirically if we do this, there's a X% probability or the expected loss will be Y. We need to be thinking ahead. We need to be using techniques like the sort of the big models that Mayank is talking about, those long-dated scenario analysis. We need to be developing those, thinking of both, the integration of the Earth system modeling with the economic and financial modeling to make better projections of what might happen. There's not certainty. We need to run multiple scenarios. I get quite worried when I see people saying, well, we've picked this scenario against which to set our targets. I think that's quite risky. So managing that uncertainty, and certainly when we look at our clients and we look at their plans, and yes, their ambition is important, and when we look at their plans and their capabilities, it's really, I think, in large part, it's an assessment of managing uncertainty. So in a sense, those are the sort of skills I think we're going to be needing to bring into all sections of society, but of course, particularly into financial markets and financial institutions as well, if we're to be successful in going through this. So don't imagine we know the answers. Understand we don't know the answers, but think about how we might sort of start to manage the risk as we go through this hugely uncertain period. And of course, the longer it takes us to start, the higher the level of uncertainty, because we're going to have to change much more quickly.
Yeah, totally agree. In fact, this is something that we've been considering as we work with other regulators on how to promote capacity and talent within Hong Kong. I know we've already covered quite a lot, from financing to data to incentive to talent. If I may just pose a final question to all three of our panelists. Looking ahead, how do you expect the interaction of green, tech, and finance to evolve? What should the audience be on the watch out for? Mayank, perhaps you could start?
Sure. I was thinking about this, and I think if I want to just put it simply, banking is going digital. And if the expectation is that sustainability and ESG has to be integrated into every aspect of banking, then by definition, sustainability has to go digital and ESG has to go digital. So I think what we will see over the course of the next decade is as ESG and sustainability becomes more integrated into everything that we do in banking, the technology and the digital aspect of ESG and sustainability will have to come through alongside. So that's how I see it getting married.
Tracy.
Sure. So time is running out. We want to see concrete actions across sectors and businesses. Just like how sustainable finance evolved, embedded sustainability, ESG, into finance. And we will need technology to advance and accelerate sustainable finance. So in the near term, I hope to see digital bank to widen the sustainable finance offering, including green mortgages, deposit, and retail green bond. And in the not so distant future, I hope to see a pure play digital green bank where you can do from origination to distribution to securitization end-to-end, which you will save cost, time, and reallocate the liquidity where it's needed to scale up, to fasten the sustainable finance. And last but not least, to watch out, what to watch out for, I would say tokenized carbon credit. There's already proof of concept in the market, so why not?
Thank you, Tracy. Jonathan?
Difficult to add to all of those good comments. I suppose that if you look, sort of step back and think of the fundamental challenge, is that we need to, in the financial services industry, we need to reallocate capital from supporting unsustainable things and have it allocated to what's sustainable. So the question then is, how will that happen, and what's the role for data and tech in that process? So that's where I think it's a very granular assessment of sort of what data and information is required and in what format to actually effectively make that reallocation. And then where does tech have a role to play in that? And it's going to be everything, going back to sort of Tracy's original map, it's going to be everything from thinking about how a bank decarbonizes and all of those sort of green bank things that Tracy's talking about. But then, of course, how are clients going to use that? What are they going to be needing? How are regulators going to be using that to make sure that the laggards don't, they're swept along and they're kept up with the leaders in this urgent process as well. And I think if you think through those, then you'll start to see in the real tech opportunities, and finance working with tech opportunities really do start to come out and surface.
Yeah, actually, these are all very interesting. And Tracy's point about how to use tech to popularize green finance is something that we've been thinking about as well. So look forward to carry on that discussion in a future panel. So thank you very much, Tracy, Jonathan, and Mayank. Thanks for sharing your insight today and your time today. And I look forward to having the opportunity to share a panel with you sometime in the future. And thanks very much, everyone, for joining us today. Thank you. Thank you.
Thank you.
About metamorphosis when you were at school. The most well-known example of which is the life cycle of butterflies. To start the process, a caterpillar's body releases hormones which would trigger drastic changes to its cells and even some behavioral changes like spinning the cocoon. About metamorphosis when you were at school, the most well-known example of which is the life cycle of butterflies. The caterpillar, which once was an unsightly crawling worm, transformed into a beautiful flying insect. The fintech industry is undergoing a kind of metamorphosis. Just like the hormones that trigger the metamorphosis of the caterpillar, technology has triggered stress that for all the examples I've just mentioned, the SFC has provided clear guidance on how our regulatory principles will apply in a digital environment. This brings me to virtual assets. Amongst all the changes in the financial industry, virtual assets is the one innovation which has brought about a paradigm shift and what we might even call a metamorphosis. To start with, it might be useful to recap how we got here in the first place. The virtual asset space has evolved dramatically over the span of just a few years. In metamorphic terms, there have been many butterfly cycles. Virtual assets first appeared on the regulatory radar around 2017 when initial con offerings were prevalent. Many so-called offerings were actually scams which posed serious consumer protection issues. At that time, international regulatory bodies such as the Financial Stability Board declared that virtual assets did not have any intrinsic value at all. The crypto world was seen to be of marginal importance to the global financial system, a fad that would eventually fade away. Those were the early days. Financial regulators were reluctant to put this under their regulatory net, as that may provide virtual assets with the legitimacy. Another challenge was where the line was drawn around regulatory perimeter. Bitcoins do not fit into the definitions of securities or funds or investment contracts and therefore fall outside the perimeter in most jurisdictions. But it was clear that the anonymity common in trading these assets raises serious issues around money laundering and terrorist financing. Not only that, but trading on unregulated virtual assets platforms raises serious market integrity and consumer protection issues related to cybersecurity, market manipulation, and safe custody of assets. Financial regulators were struggling with these issues. How do virtual assets and their activities fit into the regulatory net? Should they or should they not be regulated? At the time, the responses from regulators were diverse. At one end of the spectrum, a few opted for total ban. At the other end, some jurisdictions fully embraced crypto assets. Thinking that regulation might stymie in innovation, they opted for an extremely light touch approach. Most jurisdictions fell in between. adopting a wait-and-see attitude. The SFC was one of the early pioneers in coming up with a comprehensive policy response. We decided that we cannot rely on a narrow interpretation of our remit and took the view that the whole crypto world was unregulated, and most we could do is just to warn the investors of the risk. If in reality investors are left unprotected as crypto activities thrive, then maintaining the status quo may not be an option. This led us to announce a regulatory regime for virtual assets at Fintech Week in 2018. It included new requirements for funds supervised by SFC, which intend to invest more than 10% of a mixed portfolio in virtual assets. This is irrespective of whether the virtual assets amount to securities or futures contracts, which already fall under the perimeter of our regulation. Another requirement was that only professional investors should be allowed to participate, and we provided specific guidance on the distribution of funds with crypto exposures. We also announced that we would explore a conceptual framework for centralized virtual asset platforms operators to opt in for our regulation. A year later, that is in 2019, we formally launched this framework, publishing regulatory requirements which apply the principle of same business, same risk, same rules. What this means is that the regulatory requirements for virtual assets platform operators draw heavily on the standards we expect of conventional securities brokers and automated trading platforms. Although they have been adapted somewhat to deal with specifically with crypto technology, in addition, we required that licensed platforms should only provide services to PIs for the time being. The framework covers all the key investor protection concerns, including safe custody of assets, know your client requirements, anti-money laundering, market manipulation, risk management, etc. The requirements are the same as that of automated trading platforms and dark pools that we currently supervise. But why an opt-in approach? Our view back then was that it was far too early to change our laws to specifically cover the crypto world, which moves too fast to be pinned down by a bespoke legal framework. This approach has allowed us to protect investors, watch the space evolve, and gain supervisory experience to help us decide how the wider virtual asset universe should be regulated in future. 3 years have gone by since the inception of the idea, and we have put in place a regulatory framework for virtual assets. We licensed one virtual asset trading platform, and applications from several others are under consideration. We also approved a number of virtual assets fund managers and are considering several more. Of course, some of the crypto world would say 3 years is an eternity. But there is no denying that the regulatory landscape has gone through a dramatic change in a short period of time. First, in recognition of the fact that virtual assets are going to stay, most regulators around the world have brought them under some form of regulation, at the very least, some kind of anti-money laundering regime. The Financial Action Task Force, FATF, made a strong global push towards greater regulation of the virtual asset space. It enhanced the standards to require jurisdictions to license or register virtual asset service providers and subject them to the same range of AML obligations that apply to financial institutions. That is, again, same business, same risk, same rule. To comply with these standards, the Hong Kong government concluded earlier this year that the local AML law should be amended to mandate all centralized virtual assets trading platforms to be licensed by SFC. Second, regulators are paying more attention to market integrity and investor protection concerns. The International Organization of Securities Commission, that is IOSCO, has suggested specific areas to consider where regulating virtual assets trading platform. You may not be surprised to hear that these are the same areas that SFC looks at under our existing regime. Just recently, Gary Gensler of US SEC said publicly that he has made it a priority to focus on regulating crypto trading platforms. The third area of regulatory concern is stablecoins. This follows an explosion of interest in DM, previously known as Libra, in contrast to virtual assets like Bitcoin, which has no intrinsic value and is extremely volatile. Stablecoins are relatively stable, and this is a key feature of the pitch that they can make cross-border payments far less expensive. The BIS Committee on Payments and Market Infrastructure, that is the CPMI IOSCO, recently published a joint report which advocated for regulating stablecoin arrangements as a financial market infrastructure similar to traditional payment, clearing, and settlement system. The report also urged regulators to consider the systemic importance of stablecoin arrangements. These developments in the international regulatory scene underscore that the same business, same risk, same rules approach we adopted back in 2018 is the right way to go. Of course, there have also been significant changes in the market landscape over the past 3 years. Virtual assets are edging towards mainstream finance. A lot more different types of VA investment funds products are available, and conventional exchanges overseas now offer crypto exchange-traded funds. Financial institutions are moving towards offering these products and services. In recent months, we have received a number of inquiries from financial institutions eager to offer virtual assets to their private bank clients or professional investors. These questions involve complicated issues because the regulatory landscape is still very uneven. For instance, some licensed firms wish to provide cryptocurrency trading services to clients either by acting as an introducing agent or through an omnibus account arrangement open at a virtual asset platform. The question under consideration is, do these firms expose their clients to undue risks of the virtual assets platforms that are unregulated or regulated for limited purposes? Also, under an omnibus account arrangement, the firm will directly onboard the clients and trade for them, with some of the regulatory obligations typically imposed on the licensed VA platform applied to these licensed firms also. Do we expect the firm to conduct a knowledge assessment before providing VA trading services to their clients? Distribution of VA-related investment products is another area of interest. We already have guidance on the distribution of investment funds with crypto exposures. But what about other products, such as crypto-related ETFs traded on conventional exchanges? Should we allow retail investors to access these products through online brokers? If so, would there be additional requirements or risk disclosures? This is just a glimpse of the regulatory issues involved. We are now reviewing the regulatory regime for virtual assets we introduced 3 years ago to see if it is still fit for purpose and whether any modifications are required. We are in close dialogue with the Hong Kong Monetary Authority with a view to issuing a joint circular after the review. One can expect that it would incorporate the same business, same risk, same rules principle in a proportionate manner. Here in Hong Kong, we see our job as providing regulatory clarity to support the healthy development of this space, as the cocoon in metamorphosis. Some may say that the cocoon is limiting innovation and development, but like all good regulation, it will help fintech firms and their services to incubate so that they can operate within a secure environment for sufficient trust to be built from investors for this business to be scaled and provided to the wider public. To conclude, I want to emphasize that we will maintain our practical approach to provide a well-defined regulatory environment which fosters innovation, development, and investor protection. We look forward to continuing this journey with all of you and to seeing more beautiful butterflies from the fintech sector complete their transformation and move from the fringe to the financial industry mainstream. So thank you very much.
Thank you for those amazing ideas and messages that you share, Mrs. Leung. Our last session of this morning will be conducted once again on video. Our speaker wanted to be here with us, so she sent us her message. Jane Fraser, Chief Executive Officer, CT, will walk us through CT innovating for the digital world. She will share her perspective on the opportunities ahead and how the bank works with fintechs and other partners in the region to meet the speed and the scale required to serve consumers in this new digital area. So, let's listen from Jane Fraser.
Hello, everyone. Well, first, I want to thank the Hong Kong Monetary Authority for inviting me to speak at this signature FinTech event. And I really wish I could be there in person, but I'm very much looking forward to getting together in the years to come. I must say, in these unprecedented times we're in, it's easy to feel a nostalgia for those last weeks and months before the pandemic hit, when the road ahead for our industry, although convoluted, certainly seemed clearer. And Hong Kong does that for me. It was the last place I visited before COVID forced a global shutdown. And I always love spending time in Hong Kong. I have done for many decades now. It's also a place where Citi has had roots for nearly 120 years and where we're establishing a hub for our new focus on wealth management. Now, during my last visit there, I remember being particularly struck by how ambitiously Hong Kong was pushing forward on the digital front. A city firmly entrenched in a world of digital platforms where financial products and services integrate seamlessly with the platforms where consumers live their digital lives. And then the virus broke out, sending clouds of uncertainty over our economy and our industry. But here's where things took somewhat of a surprising turn. Instead of everything coming to a standstill, we've seen the opposite. A surge, an acceleration, a leap forward in the digital story. The scale and speed required to conserve consumers is now of a completely different magnitude, and I don't believe there is any turning back. Payment volumes will continue to grow. Digital currencies will continue to proliferate. E-commerce will continue, to skyrocket. And instantaneous payments will become less of a nice to have and more of a competitive necessity. And we're seeing this across our businesses. In Treasury and Trade Solutions, our institutional clients are opening accounts digitally at a much faster rate than before, over 1,000 new accounts a month. And in Hong Kong specifically, Citi's digital channels have experienced record levels of use, and video banking by our wealth clients, for example, has been notably high. At the same time, we're seeing the global economy being reshaped, and reshaped by an array of other forces, from demographics to climate change. And this has been accompanied by an explosion in wealth. $5 trillion of new wealth created in the last 18 months alone. And that's one of the reasons why we have shifted the focus of our consumer franchise in Asia at Citi to wealth management, why we're anchoring our wealth offering in financial centres such as Hong Kong, and why we are intent on capturing all the opportunities brought forth by a new generation of incredible entrepreneurs here. As we adapt to all of this change, make no mistake, we remain very committed to serving our clients, both individuals and companies, in Hong Kong now and, of course, in the future. And we're laser focused on positioning Citi as a trusted partner here in the region, in Asia, and across the globe. We see how the world's becoming more global and local at the same time, how it's becoming faster and more complex. And so we are reshaping our firm and our exceptional products and services so that we maintain our leadership and our relevancy, and we continue to deliver for our clients. At Citi, we move a remarkable $4 trillion globally each day. We enable clients to make payments in 144 different currencies. We do business in more than 160 different countries and are on the ground in nearly 100 of them. We are really proud because we are the world's most global bank, and it's our global network comprising data, rails, people, relationships. It's extraordinary, and it gives us the ability to do things that other big banks can't typically do. It enables us to connect dots and see around corners. On a practical level, this was fundamental at the start of COVID because we were able to use the learnings about what our people were experiencing in Asia to help us navigate the spread of the disease and the financial crisis as it spread to the rest of the world. Our global footprint also gives us a unique ability to help clients who are looking to grow across borders. As the surge in e-commerce and digital services has led clients into new markets, we've enabled their growth because of our ability to make cross-border payments within minutes. We also offer cross-border payments into digital and mobile wallets and real-time payment tracking services, so conducting business globally is both seamless and efficient. So through this global network of ours, we've also partnered with fintechs and non-fintechs alike to meet the needs of consumers who want financial services to be simpler, to be smarter, to be more personal, and to operate at the speed of their increasingly busy lives. And these partnerships are very important to us. They're a two-way street because fintechs bring agility and innovative technologies, while we offer a strong risk management framework and the ability to take companies global. Now, Citi Ventures, which is our venture investing arm, it invests in fintech startups to bring new solutions to clients. And there are times when the fintechs we invest in also become our partners. And let's take Grab, Southeast Asia's super app. We not only invested in the company through Citi Ventures, but we also joined forces to launch a co-branded credit card in selected markets in Southeast Asia, as well as additional capabilities, all supported by API connectivity. Now, open APIs have been another key enabler to meeting our customers where they are and integrating banking into their everyday lives. And Citi Hong Kong was the very first bank in the region to launch an API developer portal. And today, we've nearly 300 APIs available to leverage. Now, our first API partner was HKTV Mall back in 2018. And together we expanded our partnership from first offering our Pay with Points services online to today's Citi HKTV Mall credit card, which allows customers to apply, get approved and spend instantly and on a single platform. And earlier this year, we launched Citi Plus. Now, that's a digital platform that targets younger, mobile-only users, offering transactional banking service, investment opportunities, importantly, financial education, as well as different rewards through a really fun, but also a professional mobile platform, Citi's version of a virtual bank. Now, these are the seamless banking services customers are looking for, and it's the type of innovation we know we need to succeed in the digital world. So, as we look to the future, I can't help but remain optimistic about what's to come. Yes, we can't predict the path the virus is going to take, but we do have a clearer sense of where our industry is headed. The opportunities in digital and the speed in which we need to move are equal parts fascinating and motivating. And Citi is certainly up to the challenge. So let's continue to work together. Let's push the envelope in the innovations we deliver so we can always be one step ahead of our clients and our customers in their needs. I cannot wait to see what this community and Hong Kong does next for our industry. Let's go for it. Thank you.
Well, as Jane said, let's continue scaling FinTech future together. And now it's time for a break. I know you all want to go out, walk the floor, network and connect. And remember, coming back after lunch, we have more interesting sessions on NFTs, cryptocurrencies, and CBDC. And if you have any questions, if you have not done it yet, we have, through our events app, the Slido platform where you can submit your questions. And they're going to be voted from different participants. And those that have the highest votes are going to have a higher chance to be answered by our speakers. So please send your questions. And you can also participate and give us your feedback through the live poll in the event. Remember to tag us, #HKFTW, to download the app if you have not done it, and to go to the networking online at the deal floor. I'll see you soon at 1:30 here at the global stage. Thank you.